Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to talk about gold as price has broken to the downside as the dollar has strengthened due to the latest CPI data. So we can see here CPI showing us that there has been some further growth in the US, and we saw the figures come in above estimations. So we were forecast to see CPI month on month grow to 0.2%, but it actually came in at 0.4%. That's a 0.3% rise from the previous. We've then seen the CPI year on year come in higher as well, which was to be expected, and then core CPI month on month has also come in higher than expectations, but at the same level as previous. So core CPI leveling out slightly, CPI not so much. Now that caused the dollar to strengthen significantly, and we can see that it has also caused the gold price to break back to the downside. And we said this at the start of the week in the week ahead analysis video, that if the dollar is going to remain strong and the CPI numbers are going to come in higher, then we expect gold to remain to the downside. And what we saw was price traded lower, started to consolidate between 1680 and 1661, and CPI data came out. We rallied initially into the highs and then broke to the downside, closed below, giving us a move lower, which also then bounced off the minor level of 1642. Now we'll just pop up to the higher time frame first. What does this mean from a higher time frame concept? Well, if we're looking at it from the weekly trend, okay, so what we saw was price was in this range. Okay, now price has traveled outside of the range and we're forming a lower high on the weekly. Nice bearish move. So is that telling us that this trend here is now the dominant trend on gold? If it is, then we should see price continue to make lower lows and lower highs until it comes into another key area of interest, or if something again fundamentally changes. Now at the moment, with CPI continuing to push to the upside, that will have a knock-on effect on the Federal Reserve hiking rates, maybe for much longer rather than more aggressively, because we've seen the Fed recently talk about keeping on the sort of same track with the federal funds rate. They haven't really gone into any detail of how aggressive they'll be in the next meeting, so which makes me think that maybe they're going to hike further or for longer rather than hiking aggressively. Now, that being said, they do need to get a hold of this CPI data and this information that they're getting. They really need to try and put a stop to it. And they have seen a slowdown in the labour market, but that's there's no suggestion that the CPI numbers are coming down or anything like that. So inflation's still going to remain high, which could then lead to gold continuing to the downside from a fundamental point of view. If I go back into the 4-hour time frame, if that weekly is going to continue to make lower lows and lower highs, and if we are technically in an impulsive phase, then I would be expecting lower highs and lower lows out of this 4-hour time frame as well. So breaking below 1661 could invite some sellers to come back into the market. We may see a pullback first, which is what's looking likely at the moment, maybe a back into this range or even the lows where price sold off from originally. That could invite some further selling pressure, and if we were to see sellers re-enter the market at this point, we could look for opportunities for prices to come back down towards the 1620 low. If the price was then to trade through 1620, then that could open up lots of opportunities for gold prices to fall even lower. So I'll leave it there. Hope you enjoyed this video update. Hopefully that made sense. If you did, leave this video a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content, and I'll catch you in the next video.